Hi everyone. Today, let's talk about Fundrise. They recently released their third episode of their podcast named Onward, so I'll go over some of the things that they talked about. Then I'll go over their mid-quarter update. Then I'll go over my current positions, as well as my returns so far in Q2. If you like real estate investing and making money, definitely like and subscribe. I make videos like this as well as individual stock reviews every single week, so make sure you hit the bell so you don't miss out on any future content. Welcome to the Portfolio Bulletin. Let's get started. So the podcast Onward is on all podcast networks, and it's pretty good. So far, the CEO has been on every single one. I don't know if he's going to be on all of them forever, but so far it's been nice to hear directly from the leader of the company. And in this case, he talked about private equity. He went into the history of private equity and what investing used to look like, especially for real estate, going back to the 80s and 90s. And how Fundrise is really building on what that looks like into the future. So then he talked about how private equity in the current times is not very useful and is potentially going to fade out once everybody moves into a higher technology, more individualistic style of investing. And really, that's what Fundrise is. It allows individual investors like us to invest in things that used to be restricted to private equity, or just individual investors buying individual homes and renting them themselves. It helps bridge the gap between private equity and public REITs, which allows for a better cost-to-benefit model. Otherwise, if you're not a financial nerd, it might be a little bit heavy to listen to, but I thought it was quite good, and I definitely learned some things that I didn't know before, especially in the history department when it comes to private equity. Moving over to the mid-quarter update, they say as public markets falter, we remain confident in Fundrise as a fortress for investor portfolios. I was actually pretty surprised that they did a mid-quarter update. They definitely don't usually do that, and they don't even always do a quarterly update. So a mid-quarter is definitely a little unusual, and they mention that here. They're trying to increase the amount of times that they communicate with investors, and they say they're not necessarily sure they can do this all the time, but they felt that it was warranted. They say at the end of Q1, there's quite a bit of uncertainty in the markets, and that inflation is both greater in magnitude and more persistent than was expected. Then they refer back to the second episode of Onward, where they talked about how they're going to attempt to predict the future and play out the different scenarios and how they are going to react to those, depending on what happens. To summarize, they say Scenario 1 is most things stay the same, Scenario 2 is things get worse, or Scenario 3 something completely unexpected happens, like COVID the first time around. They say 45 days later, we are in the beginning stages of Scenario 2, where things are definitely a little bit worse than they were 45 days ago, with inflation being not transitory, and supply chain issues continuing to be disrupted much longer than expected. They say at this point, it's not if things will continue to get worse, it's how much worse and how quickly is that going to happen. They also mention the NASDAQ, which is down 26% year to date, which for me as a trader has been pretty sucky. They then mention the Fed rates going up by 50 basis points, with the standard rate at 1%, which is not super high, but we do expect it to continue higher. They say the Fed is walking a tightrope, trying to tame inflation while not collapsing the economy. But if you watched my video from earlier, we did talk about the Fed comments and how they are a little bit more willing to accept risk on the economy to tame inflation. So what does this mean for you as the investor? Of course, future performance cannot be guaranteed, but they think they've put themselves in good markets and good specific assets within those markets to allow for a stable foundation that is able to weather severe storms. Again, this does not mean that they are not susceptible to some market corrections, especially within real estate like we saw in 2008. There are certainly some increased regulations around real estate and lending that should reduce the amount of leverage in real estate, which should help it be a little bit more stable than it has been in the past. They then mention some of the effects of the Fed starting to shrink their $9 trillion balance sheet, which a couple years ago did create a mini liquidity crisis, which caused the Fed to slow down on their selling, which again is another tightrope that they're going to have to walk. If you've watched any of my Fundrise videos in the past, you would know that the CEO of Fundrise is very paranoid and worries about many things all the time, and he mentions this again here, only the paranoid survive, because you have to take care of your downside so that the upside can take care of itself. Moving over here to my portfolio, you can see the flagship real estate fund is my highest holding at 22%. And then everything else is spread generally across the markets. Fundrise E-Fund pretty high here. Fundrise Growth 3 largest holdings. And then everything else is generally between 5 and 1%, with the Income Real Estate Fund being the newest addition to my portfolio, where they took a couple of the other old REITs and merge them into this income fund, which is another interval fund similar to the Fundrise E-Fund. Definitely check out my previous videos if you want a little more information on what exactly that means. Then you can see my Fundrise IPO shares here, just over $10,000 invested in Fundrise IPO shares. This allows me to own 1,100 shares based on all the different times that I purchased. Moving over to performance, you can see not great performance here in Q2 so far, but of course this is all dividends to this point. So not too bad, 0.3% dividends here in Q2. And then once they come out with but I am in the long-term growth portfolio, so once they come out with their appreciation, we'll see a little bit better what this looks like somewhere around the middle of next month, and I'll definitely readdress that then. If you are not an investor with Fundrise yet and you want to, definitely check out my link in the description. I think Fundrise is a great platform and it's definitely one of my largest holdings, so I definitely believe in this company. And it's a great way to get into real estate for basically any amount of money. If you choose to join, definitely use the link in the description because it really helps out the channel and you'll get $50 worth of free shares just like I will. Let me know down in the comment section what you think of Fundrise. Is this company going to continue to return great money to the investor? Or is this a company that's going to struggle if the economy takes a stronger downturn? Definitely like and subscribe if you got any value out of this video. And make sure you hit the bell so you don't miss out on any future videos. Of course, none of this is financial advice. This is all for entertainment purposes, and have a great day.